Hello and welcome everyone to this week's Commitments of Traders review. I'm Thomas from COTbase.com, and today we're going to have a look at the 35th report of this year. As usual, we're going to start off with the changes in commercials positions, looking at the largest ones this week. Okay, here we go. And you can see right away that metals are still on top with the changes, so nothing really changed from last week. This time we've got gold on top with the 28% change. Let's have a look at that market. Okay, we've got the change over here, and yes, it's definitely larger than average, but we've seen a couple of similar changes in the past. Let's open the 5-year chart to have a broader perspective about the market. There we go. You can see that small speculators are becoming more and more optimistic about the market. Usually, whenever they're at those levels, for instance over here, it tends to push prices lower, but we still got some space left to become really extreme. Commercials and large speculators are definitely not in extreme territory, so they still got some space left. Let's have a look at silver, the market that we've been analyzing the last week, and the market that had that nice buy signal 2 months ago, right over here somewhere. And last week I said that the change size could push prices a bit lower, and they did a bit, but not really. So I guess the COT extreme signal 2 months ago is still in effect and pushing prices higher and higher. So I guess until we reach a let's say a roughly net short level of 75,000 to 100,000 contracts in commercials positions, and let's say small speculators being net long roughly 25,000 contracts, I would say that the rally can continue. We are not at that extreme level, and I don't think that the change size this week would affect prices dramatically. So keep your eyes on this market, some good opportunities there. Let's move on. We've got 30-year bonds with the 17% change there. It's a buy signal. Okay, so we've got it over here. You can see that similar size changes and even larger ones happen quite often in this market. Interesting to see that only small speculators are net long in the market. So large speculators and commercials both net short. Large speculators just turn net short this week. Let's have a look at the 5-year chart, and then we're going to move on to soybean oil. There we go. Soybean oil, 15% change there. Not a really strong one. I guess we can say that it's more or less an average size change, so doesn't really draw too much significance. I would say 5-year charts tell you more. Let's have a look at that one. Okay, we're not at those extreme levels yet. We are becoming a bit bearish soon. Well, if you look at this point over here, when the commercials were net short roughly 75,000 contracts, it could push prices lower. Of course, we had that little trend, downtrend line over here somewhere. We've actually just broken that, so interesting whether prices could rally a bit more or they're going to turn down. Let's move on, have a look at the COT extreme for large speculators. Okay, we've got NASDAQ on top with an all-time signal in large speculators positions. So never in the history of NASDAQ were large speculators that net long. So it's definitely an extreme case. We've got small speculators very optimistic about the market, and commercials way down at 497 report extreme level. So I guess that could signal a bearish turn in the near term, maybe next week or the week after. Feeder cattle, we've got a 543 report extreme there. Oh, interesting to see commercials and large speculators both going in the same direction, only small speculators taking the other side. But of course, reminder, a lot of commercial participants are actually just not reaching the reporting limits to become a commercial, so they're considered small speculators in this market. Just if I open the 5-year chart, you're going to see that strong correlation between the two markets. There we go. Let's move on to coffee for a moment, where we had the 416 report extreme. We've talked about this market the last week. The interesting thing was that commercials are net long, which doesn't really happen that often. If you look back in time in this 5-year chart, you're going to see that when they were in such net long positions. That was actually the bottom of this chart over here on this 5-year chart. So it's definitely a bullish signal. Question is when it's going to start affecting prices. Last but not least, I just want to show you the Chicago wheat for a moment, because we've got that all-time signal there. And I guess we can state that it didn't really change. We're still over there and still waiting for prices to confirm the change in the trend or the continuation of this rally, which would I guess mean that this extreme could even widen a bit more. That's going to be all for this week. I showed you a couple of charts, but of course we've got more on our COT charts page over here at cotbase.com, or if you would like to have a more detailed analysis, you can just come to our subscription service and check out other report types, data types, and a lot of other great functions to use. So I appreciate your attention. Thanks very much for being with me. I hope to see you next week. Take care. Bye-bye.